Good day, folks. Jim here from FX Charts, Wednesday the 2nd of April. Thanks for tuning in. Well, it's been a pretty mixed night for the US dollar. Really hasn't gone really anywhere too far, with the exception of making some gains against the yen. The yen's under a bit of pressure as the market looks to the possibility of further easing from the BOJ. But elsewhere, the PMIs out of Europe were fairly mixed, fairly close to expectations. France was slightly better, as was Italy, while Germany for once lagged the market. And then out of the States, the US ISM came out slightly weaker than expectations. So the end up has been the euro did make a high at 138.15, but it's back under there right now, and it looks as though it's going to be a fairly quiet day as the market begins to focus on the possibility of an ECB rate cut tomorrow. Probably won't going to happen, but we've got the ECB meeting, and then on Friday, of course, we've got the non-farm payrolls. So we're going to have a look at the charts. And let me just find the euro here. The euro, as you can see, it did get up to 138.15, but it's dropping around here. It's not really doing anything. It's back at 137.90. The charts are fairly flat. I won't spend too much time on the euro. As I said, I don't think it's going anywhere too far. The 4-hour charts are slightly positive, but there's good resistance at 138 to 2030 area. And I don't really think we're going above there. The dailies they're pointing slightly lower, so all up I think today is probably a 137.5 to 138.20, maybe 138.30 range, but I don't really think we're going outside that. So moving forward to dollar yen. Now dollar yen, it's up near its highs. It has broken higher. It's as I say, the thought of further BOJ easing to assist the economic growth and to combat the sales tax hike. That's seen a weaker yen, but the red line here is the previous high. That was back in early March. That's at 137 3/4. Oh, sorry, 103 3/4. So until we take that out, that's going to be some reasonable resistance. Now the hourlies are slightly overbought. We've got the ADP Jobs data coming up today out of the States now as a precursor to the non-farm payrolls. If that misses expectations, we might see a bit of pressure come back on the dollar. So I wouldn't be getting too bullish up here. But if we can take out 103 3/4, then we might be headed back up to, this is the previous high here. We've taken out this trend resistance. If we can take out 103 3/4, we're probably headed back to this 104 area, above which the next FIBO resistance is up here at this 104.30 level, which kind of ties in with the downtrend resistance here. But I think we're probably too early for that yet. The 4-hourly charts are overbought, but I do think the dailies do look as though they're building some positive momentum. And if we can take out, as I said, if we can take out this area, then we are headed back up to 104.30. Now above there, then I think we're probably headed back up to this 105, but that's too far off yet. Dips though do look like buying opportunities, and really on the day back if we saw it back towards 103, 103 or 103.30, 103.20, with the 50% pivot of the whole this whole move here down around 103, the figure, then I think that's probably a buying opportunity on the day. But possibly fairly range bound today. There's nothing out of Japan, and the market will be looking forward to the ADP numbers really before it does anything, I think. Sterling's a little bit softer. It has had a good run up, and it's come back down here, this 166.30 level where the 100-hour moving average sits. Now if we take that out, then I think we're probably heading back towards 166 and possibly a bit lower, but realistically probably going nowhere fast today, a bit like the euro. The 1-hour momentum suggests the pressure is probably going to stay on the downside, and that rallies in the short term to 166.5 are probably a sell. Further out, the 4-hour charts are also looking a little bit negative, so I don't think we're going much above 166.5 today. If I'm wrong there, then we could head up towards that's that 166.5 level. We could head up back up to 166.70, but I don't really think we're going above 166.85 today. and therefore I really looked for 166 to 166.70 to cover it, with the possibility on the downside eventually of meeting the rising trend support, which currently comes in about 165 and 3/4. But I suspect that we're a bit early for that yet. The dailies, they're completely flat. So much as in line with the euro, I think we're probably heading for a range bound session. We have got the UK construction PMI out later on. That might provide a bit of volatility. But apart from that, I really can't get too excited about it. The same really applies with dollar Swiss today. It has broken this rising trend line, but it's come back to sit back on it. It's been down to a low of 88.13 in the overnight session. That's when the euro got up to a high of 138.15. But as long as we hold this 88.02 support here, then I think possibly we're probably just going to chop sideways. The short term, the intraday charts look a little bit soft, but the hourlies still look somewhat positive. They might be running out of steam a bit on the top side. But as long as 188 holds, then I think we could head back towards 88.70, possibly 89 over the next couple of days. But again, it's nothing to get overly excited about. The Aussie, well, that got up to 93.03 after the RBA statement yesterday. Since when it's just drifted a little bit lower. There's been a bit of profit taking, really. We're currently holding on at 92.40. I think we need to hold this 92.30 support level here, 92.20.30. If we go below there, then I think we're probably in for a bit of a break, possibly back down to this, well, back down to 92 the figure, and then possibly the 91.85 area, which is the FIBO support in the 200-hour hourly moving average. So we could get it could be a little bit soft today. The hourly charts are not really looking at much direction in either direction, really. I don't think we're going much above 92.70 today. And as I say, if we do break down here, then I think we could see a bit of a run down towards 91.85 or so, and then to this more major rising trend support and the neckline at 91.50. Don't think we're going there yet, but the 4 hourly indicators are a little bit negative, and the dailies possibly topping out to roll over, but at this stage they're not really showing any signs of it. So I think we stay with the uptrend. But as I say, I think a break of from 92, the figure really would want me. I think we're probably heading back down towards 91.85, possibly 91.50. But for the time being, we stay with it and look to buy dips. The Kiwi, that was a little bit soft today as well. It did get up to 87, the figure today. It actually cracked that, but it didn't stay up there very long, and it currently looks a bit soft at the moment. It's heading back down. It's just off its lows at 86.30. We need 86.10 to hold on the day, 86.05.10. If that breaks, then we could be heading for a bit of a deeper correction. If 86 the figure gives way, then there's not much to hold it really until this FIBO level, which is down around 85.5. So I think just be a little bit careful. But the dailies are not showing any great sign of doing anything. So while the rising trend support holds, we can stay with it, but I would have stops fairly tight under 86 the figure, I think. So that's about it for today. As I say, we've got the EU GDP and the US ADP Jobs numbers coming out later on. Also US factory orders. From the UK, we've got the construction PMI, and from Australia coming up soon, we've got the building permits. All up there, I think it's going to be a fairly range-bound session. I wouldn't be looking for too much ahead of the ECB tomorrow. And then, of course, the non-farm payrolls on Friday. So that's about it for today. So have a very good one, and we'll talk to you tomorrow. Cheers.